Good afternoon. Andy Moss here, tradingadventures.com, with a quick rundown and walkthrough of a day trade I did yesterday on TEM. This is not a tactic for everyone. This page, of course, is more focused on swing trades and longer term setups, but a day trade every now and again when the market conditions are ripe for it. It seemed ripe yesterday on one of the hottest stocks out there right now, Tempus AI. You can see it's just had an incredible run from the low 30s down here up to the hit $90 yesterday, a high of 91.45. So it's been on the front of everyone's mind. It's been on all the watch lists. And after this pullback, we're looking to come down and test this pivot high area and the 8-day moving average. So I wanted to walk you through just a quick options trade I did on this stock yesterday, and I'll explain what options I used and why. So let's go over here to the 2-minute chart, and I'm going to go back and do a bit of a replay here. What we're looking at is TEM is selling off. It made a new high in the morning and then sold off pretty hard all day long. And as the day progressed, it got closer and closer to that 5-day moving average. And so I want to point out that this is a true 5-day moving average. This is not a 5-period moving average on a 2-minute chart. You notice this is a 2-minute chart. I do use this for day trades and precision entries and exits when necessary. But what we're looking at is TEM was selling off. It was sliding all day, and it got down here very close to the 5-day moving average. We've got this sharp sell-off here down near the average and a dip in the RSI up here. And I didn't take that trade, and I'll tell you why. It's because it didn't get quite close enough. That would have been okay for someone that's keyed into that type of setup and really ready for that. I was not, so I was just watching how it behaved after that. And let's just walk through what happened next here. Is it comes back up. It's back at the top of the Bollinger Band here, and then it starts coming down lower again. And these lines will be relevant here in just a second. I want to show you, this is really what triggered my entry. We come all the way down, and it dips below the 5-day right here. Watch, see that? This candle right here is this hammer below the 5-day, and then it quickly came back up. And what's happening at the same time is we had a positive divergence in RSI. Now, keep in mind, Bollinger Bands, moving averages on the 2-minute time frame, all that kind of stuff. The shorter the time frame, the less reliable these things are. It's not the same as looking at RSI on a daily or weekly chart. However, it is still a useful tool. And so this quick dip below, right on the 5-day moving average, combined with this positive RSI divergence, I'm watching this candle develop, okay? And I had my order ready to go when this subsequent candle went above the high of this candle. That's my entry signal. I know a rebound is in place. It's got all the pieces. We see a really big volume spike here. And so that was the entry that got me long in a position in TEM. Now, I could have just bought the stock and put a stop about 78, 75, something like that, and you'd have been risking about maybe 75 cents in a trade for upside of at 79.50, call it. The first target's going to be in this area, about $81 here is the top of the Bollinger Band. Then you've got a pivot area here at around 81.50, and then ultimately we're looking for the VWAP up here around 84.11. Now, in this instance, yesterday's the first trading day of the week, so the daily VWAP and the week-to-date anchored VWAP are the same, and so $84 is the eventual target, which as the day progresses, this line keeps coming lower, so you have to keep in mind that. But you got a couple target options there. So even if it hits this intermediate target of $82, you're risking 75 cents to make $1.50, a 2-to-1. That's not optimal. You want to have a 3-to-1, but that was the setup, and there was a potential for more here on up above. So now the reason I did this with options is because, number one, your risk is absolutely limited. You cannot lose more than premium paid. So if something, if there's a news event, maybe it comes out that Pelosi sold her whole position, whatever it is, make up whatever you want. I can't lose more than the options premium that I paid. Now, second of all, I used 5-day expiration. They're very close, and so they're going to move very quick. I was looking at the $85 call options expiring this week. So this is going to be a very quick trade by design. When you're dealing with short-dated options or weekly options, it's going to be very quick because the time decay is really ramping up here as you head into expiration. So the reason I went with 85s is because that kept the cost low enough, but the stock was 85 at 10 o'clock earlier in the day. So it's not like it's out of reach for those options to end up back in the money. Even though I'm targeting below that, they still have a delta big enough that I'm going to get a sizable move if the trade works out the way I want it to. So at this time right here, those options are trading for about $1.90 a piece, or $190 per contract. I think I paid $189. So there's your max risk, $189 per contract. Size that however you want. If you don't want to lose more than $200, you buy one contract. If you don't want to lose more than $1,000 on a trade, you've got room there for 5 or 6 contracts. You see how it works. Worst case scenario, again, is that they expire worthless and you're out the whole trade. The best case scenario is you can get a multiple of your money back. It could be 100% winner pretty quickly or even beyond. And so that's what we're looking for. As the trade progresses here, we're looking for the maximum potential in this trade timeline is back up to VWAP here. It's starting to flatten out. The stock has risen nicely. And so at this point, what am I doing? You guessed it. I'm trimming the position. The options moved quickly from 190 up to about 240 in this area. So that's about a 25-26% return in just a few minutes. That's pretty good. I'll take some of that off and reduce my risk and lock in some profit there. And then as it continues, I'm going to do that again on into the end of the day. When things start really ramping up into the close, then the options are back up, and there we go right there. This is about where, this is not quite 4 o'clock, and the options were trading up about $3. I think my highest sale at the end of the day there was $2.85. So again, from there's $1, there's 30, 33, 35% gain in an afternoon. Take most of them off, and then I still think, so I've hit this target, right? Here was the upper Bollinger Band. Here's the intermediate target. I'm down to a third of the position at this point, and I still think this is possible to hit the the final goal right here. So I'm holding a small piece left. I've already got good profits booked, and I have a runner in case it wants to go up further, which this stock certainly has the ability to do, and I can leave that knowing that my risk is capped and even cushioned very nicely by the profits that I've already booked. So then let's take it on through the end of the day here. We're getting close to the close. And this is 9:30, boom, right here at the open, the stock hits that final target. It's back to the weekly VWAP, very close, and the options trade $3. They actually maxed out here this morning at a high of $3.30. I closed the last third of my position at $3. I'm done with the trade, and I can book it and move on to the next one. Now, what happens after that? And this is an important lesson with short-dated options because the volatility in the option prices can be very, very abrupt. That's why we're always very quick to trim and take profits and keep risk limited, because looking at what happened later on after the open, you can see it's getting pretty loose and wide here. It comes down, it goes, and then it starts coming down again, and look at that. Now it has dipped below the 5-day moving average one more time. And at that point, the options hit a low of right about $1, actually $1.15 there. So maybe you're okay with that. Maybe you don't want to stick around with that. I stuck to my plan. This was my target area. I closed the trade, and I'm glad I did, because watching it go from $3.30 down to $1.15, that's not necessarily going to be a fun thing to do unless you had allotted time and resources for that to happen. So I'm done with the trade. The other option there is If you have that small runner and you're totally comfortable with it and you think the stock could go more, let's watch what happens. Another bounce from the 5-day, and it's back higher again. And I'm going to go ahead and close the replay and come up to real time now. And you can see the stock is back up to 86.72. The option is currently trading at about $3.60. So that's a double. From 180 to 360, you've officially doubled your money on the last piece there. If this is the last piece, you can continue to hold this on into the rest of the day. It's in the money now. Personally, I want to be out. I'm not sticking around to see, this could easily be zero at any moment on news or just any kind of headline selling. And, with expiration so close, for my style and preference, it makes sense to take the profit and move on to the next trade. So there's just a quick review of a planned day trade. It actually went over into this morning, so not purely a day trade. But the point is, it was a quick trade by design. I knew it would be a quick in and out, and I wasn't ever planning to stick around and hold on to it through Friday's expiration. Now, you can certainly design a trade that way if you want to. TEM, who knows? Maybe it's over 100 by Friday, or maybe it's back down in the 70s. That's why I went ahead and booked the profits and got out. But you can design these trades any way you want to. So I hope you find that useful. Take these ideas and concepts. Let me know if you have questions, and we'll keep these kinds of informational videos coming.